Are you thinking about buying a home and want to afford more? Well, I've got good news for you. Next. Hey there, my name is Ryan Skaggs, and this is the Mortgage Minute. This channel is dedicated to everything mortgage, real estate, and interest rates, and we're going to start with those interest rates. Well, Freddie Mac comes out with their average 30-year fixed. That is a nationwide survey. I've got a link below. The average 30-year fixed up to an all-time high, 7.08. Now, I've got a smile on my face because I'm excited to share some of the details behind that. Not that we're all-time high, but more to come here. So that 7.08, again, that weekly survey is linked below. While you're down there, hit that like button, hit that subscribe, and click that bell icon to be notified as I'm putting out weekly videos on the channel. Now, today we're going to talk about as rates start to come down. I'll explain why I believe that rates are going to start to come down. As rates start to come down, we're going to likely see more affordability in terms of the house that you are purchasing. Now, why are rates going to come down? Well, today is the 10th of November. This video will be coming out on the 11th on Friday. And we're seeing that the CPI or consumer price index came in much lower. So that gallon of milk came in a little bit lower. That carton of eggs, that whatever it may be, came in slightly lower. That potentially means that inflation has peaked. And I've done videos on that, so I will link up above on the videos that I've talked about that in the past and then kind of showed some charts. With that said, if inflation has peaked, that's really good news. That is going to start to push rates back down. So if we have kind of reached our potential peak, now what will happen as we do that? So what I want to do is take you onto the screen and essentially show you what happens with 1% decrease in rate. So right here, so you can see we got a 7% rate. Let's assume your purchase price is $500,000. Now this payment assumes zero down. Okay, so completely understand. This assumes a $500,000 purchase price and a $500,000 loan. I wanted to use apples to apples so you could see exactly what that is. But if your rate is 7 and your payment is $33.27, what happens when the rate goes down to 6? Well, when the rate goes down to 6, you can afford $554,900 in the exact same scenario to get the exact same payment, right? So basically an 11% difference in affordability with a 1% change in rate. Now, let's expand on that. Now that $554,900, what does that mean if rates move down to 5%, let's say? Now that's almost $620. So you can see there another 11% move. Now the math is not perfect, 11.00, but essentially a 1% move in rate is an 11% move in affordability. So if you're waiting on the sidelines to purchase for rates to go down, I disagree. And that's a whole nother video that I can, hopefully I've got some content I can link to, but I really believe that this is an awesome time to be able to get some deals. Specifically in our market, in the Chicagoland market, we've had 122 weeks straight of appreciating home prices. And we just came to the first week of home prices being flat. So with that said, we're likely going to start to see, the prices stabilize in terms of real estate. Now, there are going to be other markets, like Arizona, Florida, other places that have saw huge increases during COVID that will likely see declines. Our market is incredibly stable right now, and I believe that's going to be the same. So one of my hypotheses is that, hey, even if the rate is high, it's great time to get in there because we have a stable market. We're likely not going to see declines in the overall price point, but now you can go in and get a good deal. For those people that have to sell, that are moving other places, you could potentially get a really good deal and be the only buyer out there. With that said, the other good news in my mind is that we've potentially peaked in inflation. We've potentially found that top, and we're starting, maybe we'll be, kind of up here for a bit, but we're starting to come back down. And that means there's going to be more affordability in the future. So if you can find something in your current price point, refi later into lower payment, oh my gosh, win, 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 win. So put your comments below. Where do you think rates are going to be at the end of the year? I'd love to hear your comments. Thank you so much for tuning in. My name is Ryan Skaggs, and this is the Mortgage Minute. Stay safe, and we'll see each other again very, very soon.